This rand strength seems to go from strength to strength. Of course, we had it strengthening right from that race decision a little bit earlier, 2 weeks ago, and no end to it.
Well, international factors have really played into the rand's hands, Stephen. We've seen a really buoyant equity market and risk appetite creeping in. We've seen a weak dollar across the board against most currencies, and the rand now approaching very key levels.
Eleni was talking about that 720 level, but it has been meeting resistance at 720 for quite some time. Do you think we could break that resistance?
Yeah, I think if factors continue to support, Stephen, then certainly we may see a test of that level. The problem is that it's such a big level that there's once we do break through, there could be quite a slew of stop loss levels below that, because that's a support line that goes back to around 2004. And if we do break and close below that on a daily and then on a weekly basis, technically, that opens the way for 7, and I think that would make the Reserve Bank very, very uncomfortable. So it's going to take some doing, but below that level, I do think there's quite a bit of stop-loss selling to come through.
Well, perhaps looking at some of the economic data that has been coming through, we had those growth figures out of the US on Friday, and they were slightly disappointing, and I would have thought would have led to some risk aversion. But we also had the Chicago PMI, and that seems to have contained those losses on markets.
Well, ironically, I think, Stephen, the longer that the sort of benign scenario plays itself out, and benign, I mean recovery continuing, but slow to gain some momentum. Ironically, I think that what's happening there is it's pointing to lower rates for much longer going forward. And the assessment is, that as long as that scenario plays out, then that's very good for emerging markets, particularly with a higher interest rate regime, because that would attract the necessary flows as investors seek returns worldwide in other markets.
Well, our own data out on Friday, we had that trade number, a surplus of 5.6 billion rand for June, and the biggest in 6.5 years. Do you think that helps support the rand as well?
Absolutely, Stephen. It's rather surprising because we've seen some very good imported demand over the last few weeks and months, and it does point to the fact that certainly on the commodity front we're exporting more than possibly we would have expected, and certainly that number did help to push the rand through some technical levels just below 730.
Well, if we saw the rand continuing at these levels, do you think we could see that trade surplus just as quickly turn into a deficit as exports dry up and more imports grow?
Yeah, I think we have to be a little bit careful, Stephen. That number has surprised or has been rather fickle in years gone by, but I think the trend is a positive one, because on a cumulative basis, our trade deficit for annually is looking a lot better, and of course that's supporting rand at the moment as well.
Well, we had some PMI numbers out of China this morning, and the HSBC PMI falling below that 50 threshold, official PMI just above 50. So quite a negative start to the day, but it looks like the Asian markets overlooked that.
Yeah, a little bit of deeper analysis into that number suggested that it wasn't as bad as first glance. There were some technical issues in there, and that's what the market is focused on. In fact, that it's not as bad as it appears. And once those technical factors are worked out, the system, in fact, could have been a rather positive number, and that's put a bit of a floor under the equity markets. And since that number is released and analysed, we've only seen equity markets across the globe shoot a little bit higher.
Our own PMI picking up slightly, but still below 50. So negative news for our manufacturing sector, and of course that rand's not going to be helping.
Absolutely, Stephen, and I guess that's the question marks that surround the market at the moment. We do have this trade surplus, albeit a rather fickle number historically, but on a cumulative basis looking a lot better. We have the Reserve Bank complaining, and many manufacturers complaining about a strong rand because it's hampering our manufacturing, certainly our export sector, and ultimately job creation. The PMI seems to back up that view, but then we have a steady inflow of offshore funds that's just continuing to push the rand towards that key 720 level.
We were chatting about the US economic picture just a moment ago, and of course we had PMIs coming out across Europe today as well, and really a mixed picture. We've got German PMI up, Swiss PMI at a record high, British PMI and French PMI tailing back a little bit though. What are you making of the global picture at this stage?
Stephen, very difficult to bed down. It's not that long ago we had the Swiss National Bank intervening in the currency market, selling Swiss francs in order to weaken their currency, because they were concerned about similar factors to us. Now we have a record PMI as far as the Swiss are concerned, And I guess the mixed picture is just pointing to the fact that in the developed world, at least, rates are going to remain lower for longer, and that's heightening the risk appetite as far as emerging markets are concerned.
David, from current levels, where would you expect the rand to go? Of course, we have had these record inflows into our bond and equity markets in July, particularly good for bond inflows. Do you think they're going to continue to support the rand going forward from here?
Yeah, Stephen, my sense is that investors around the world have got so much liquidity at their disposal as central banks continue to put that liquidity into the system. We've seen borrowing across the globe, corporate borrowing, non-existent, and that liquidity has to find a home somewhere, and we've seen that inflow into our bond market and to a lesser extent, I suppose, into our equity market. If factors remain supportive, if the sort of recovery remains at a benign phase and points to the fact that rates are going to remain lower for longer, then certainly I think the rand can have a look at that 720 level. What happens through there, could be rather messy. And it just depends if the Reserve Bank decides they want to make a stand at that point, because technically below that, as I said, we've broken a 6-year support trend area, that could be rather problematic as far as the Reserve Bank is concerned. But at the moment, factors as far as risk appetite are concerned, very supportive for the rand, and I wouldn't be surprised to see a look at 720 in the days ahead.
Do you think the rand at current levels could be the catalyst for a rate cuts when the MPC meets again in September?
Well, certainly, as the reaction to the non-rate cut 2 weeks ago, that's what spurred the current, coupled with the global scenario, of course, that's what spurred the rand to these levels. I think below that, it's certainly going to have an impact on CPI and to a lesser extent, I suppose, PPI, and that may well feed through into a rate cut later on in the year.